Hello, everybody, and welcome into VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. We are bringing the VRIC to you. Today is February 2nd, 2026, and I'm joined by John Feneck, President and CEO of Feneck Consulting, and Don Durrett, founder and publisher of GoldStockData.com, to continue one of the most popular panels on the channel. Gentlemen, it's great to have you both back on the show.
Oh, thanks for having us on, Jesse. Top panel. Wow. I'll take it.
Well, let's
Thanks,
not get ahead
Jesse.
of ourselves. Number one is Michael Oliver and Alistair McLeod. Somehow they're I don't know what's going on with that pairing. They explode. But you guys are the consistent. You're not number one, but you're consistently pull great numbers, and people always love the panel. So I would put
Great.
that at a very high level. And of course, we want to talk about silver as we kick things off today, and ask the question: what on earth happened? The final trading day of last week sent silver crashing over 25% in a single day. As we're recording this right now, here, silver is down 7.5% on the day. We're at around $79. So it started lower and it's starting to stage a little bit of a comeback. But I'm wondering if you could speculate for us on the cause for this massive drawdown and how you see silver from here, because we do have to remember that it wasn't that long ago where $50 silver, it seemed outrageous if you said silver is going to $50 in 2025. And yet here we are. We went too far, too fast. Is this a question of Icarus flying too close to the sun? What are your thoughts? Don, I'll start with you.
So I always say this has nothing to do with silver. It's all about gold. So gold went all the way to $5,600. I mean, gold was absolutely on fire. Gold had to correct. I mean, it was going straight up, and there really was no rhyme or reason for it. There was some issues around, maybe Trump was going into Iran, maybe he was going to bring in a dove, but it was going absolutely bonkers. But I think the main reason it was going bonkers is because there's so much trading going on, so much leverage. People are just cannot get enough of it. They love to trade, they love to use margin, and so gold got pushed all the way up to 5,600 last week. We had 2% days. It was absolutely going absolutely nuts. So and Friday was the Friday close. So it was a combination of these factors of massive leverage and Friday close, and he picked up a bit of a hawk with Warsh. It was kind of all these issues came together, but in tandem with that, I think there's something we can't prove is that there was something, there were some players behind the scene that wanted gold and silver to go lower. So gold, it's off 20%. It was the high was 5,600 and it traded down to 4,400. $800 move in 2 days, Friday and Monday, down 21%. And silver is more volatile. And so silver was up 200%. It was at $35 the first week of August. So it was up 200%. So it went down 41%. But what people need to realize here is that what drove gold and silver up, the fundamentals haven't changed. That's why, this didn't really bother me that much. For the year, gold started the year at 43.50, and we're at 46.50, so basically about 10% up. Silver started the year at 70. You mentioned it at 79. That's over 10% up for the year. And the HUI started the year at 700, is at 768, again, up 10% for the year. And Newmont, one last number, started the year at 100, and it's at 111, up 10% for the year. So if you didn't buy stocks in January, you're up 10%, which is a pretty good month. Plus, all the fundamentals are still in place. But a lot of this big, massive correction was the traders took it on the chin, and people that got, and I told people, if you're going to buy a bull market and you're going to buy, a trending market, buy a lot of Band-Aids because you're going to get some knife cuts. So there's a lot of people that bought this month that have paper losses. But on the whole, I'm pretty happy to the start of the year. I'm actually more bullish this year than I was last year. I say the winds that are back, and people are like, how can the wind be are back? Well, we're up 10% and we still have the fundamentals.
Yeah, that's a great summary. And recency bias obviously kicks in. It gets up to over 100 and people start to have visions of sugar plums and it's going to now next step 150, 200, and then it corrects and everybody suddenly believes that it's all over from here. It's just social media drives a lot of this, all these accounts posting memes and commentary on day-to-day price action. Causes people to get shaken out where the fundamentals, as you mentioned, are still very strong. John, what are your thoughts on the dramatic drop in both gold and silver, and how do you see things moving forward from here?
Sure. So, yeah, I'll just comment on what you said, Jesse, which is there's a lot of people that are all of a sudden very smart on silver and gold. 200 silver, 300 silver. I haven't heard of half of these people. Don and I have been doing this for 25 plus years each. I bought my first silver in 2000, right? So, my largest position going in December 31st is physical silver in my portfolio, 17.8%, which is publicly posted, right? So like we don't just talk what we're talking about. Don and I are two of the people that actually have skin in the game, a lot of skin in the game. And so, this is painful. However, anytime you see a move like Silver's move over the last couple of months, it was basically like a hockey stick. We were saying on all shows like yours, Jesse, in fact, probably on the last show that we did together, that, at a certain price, 100 for me, I'm going to start getting out of some silver. And I don't care what the public thinks about that. That's my decision. But at 115, 120, we were starting to sell. We sold about 8%, right? I mean, not a lot, but we sold a decent amount because I'm like, this is really unsustainable price action, in my opinion, based on what Don just said, which is, 30, 35 was last year, not just 50. 30 was major resistance for 11 years. So once we broke 30, I went on Kitco and a bunch of other podcasts saying, hey, look, 50 by the end of the year for sure. Like this is definitely going to happen. Did I think 100 by this, by the end of the year? Absolutely not. Like I'm just being honest. Like this is extreme price action. And I hope we can talk a little bit about silver equities as well, because I think there's been a lot of misunderstanding amongst investors in terms of the leverage to the move in silver.
Yeah, we absolutely will. Before we get there, let's focus on gold specifically because gold also correcting dramatically on Friday last week, only around 9-10%, not nearly as severe as silver. As we sit here right now, I think Don mentioned the price we're at about 4,660. It's down 4.8% as of this moment. Do you see gold as the more resilient asset long term here? And how do you expect the gold market to play out for the rest of 2026?
Yeah.
And John, I'll go to you. Yeah.
Sure. I think gold is the most resilient asset. Gold leads and everything else follows. And if you don't believe me, look at silver's move and how aggressively it caught up to gold's move. Look at palladium, PALL. Look at platinum, PPLT, copper, CPER. The ETFs all look the same. They all took off after gold. And so, yes, gold is very important to the overall commodities complex. But an 800-point move down would scare and shake most people. I'm not scared at all. This is a buy the dip moment, and I'll tell your listeners why. When you look at what the large banks have done over the last 12 to 13 months, they started to come out very aggressively last January and started to say, "Hey, 4,000 gold, 4,500 gold," right? Like this was like amazing to me, and I know I said this on your show, which is this is bullish. This is not a contrarian move here. This is like Bank of America, Citi, Goldman, JP. These are huge institutions saying, "Oh, by the way, we've been short for years or playing manipulative games with the metals, and all of a sudden we're bullish." Like that was like a very big like all-in moment for us in January of last year, which has turned out to be amazing. Now let's look at what's happening over the last few weeks. JP Morgan goes to 6,000 gold. Bank of America goes to 6,000 gold, etc. Like they're not pulling their numbers here in the last 2 days. They're just still saying, hey, look, this is 6,000 an ounce. 6,000 an ounce means tremendous things for gold stocks. I mean, tremendous things. We're about to see earnings, Jesse, and I'm sure we'll touch on gold stocks in a minute here. But I think this quarter is going to be phenomenal for the gold producers.
Well, let's talk about the miners, both the gold and silver miners, where you see opportunities in that space, any names you can share that you have high conviction in. And of course, John, you were mentioning that a lot of these equities are being mispriced. We'll get into that, but Don, I'll start with you on this one.
Well, I'm going to be a politician here and punt that question because I think the readers, the people that are watching this, really are interested And are they in the right position? Is gold and silver the right place to be, and why? And I want to talk about that because I think that's
Yeah,
much more
great.
important than a few names. But I'm sorry, I'm just being a politician here, answering my own question. Just because I just feel it's really important because a lot of people did buy in January and they're like, is this the right, am I in the right place? What people need to know is the backdrop of why gold, and John's absolutely right. Gold is the leader and gold will be the leader. Gold's a massive market, but central banks aren't buying silver, they're buying gold. And people need to realize why they're buying gold. Since this all changed when the Ukraine war started in 22, and then 2 years, it took basically 2 years for the world to basically realize what had just happened. And what had just happened was basically a new monetary system started getting created. That new monetary system. So the BRICS was the only international trade platform available globally. It was the only one. So when they kicked Russia out, Russia basically had to figure out a way. Okay, we need another way. So they're part of the BRICS. So they went over to China and said, "Hey, we need your help." And Z said, "Okay, let's be friends. Let's work together here." And so it took about 2 years. And then in February of 24, exactly 2 years later, gold broke out from 2000 and went up $3,500. And it's all because of this new monetary system in tandem with the U.S. economy no longer, and Ray Dalio goes over this really eloquently. He does a really good job. The U.S. economy no longer can rely on its debt markets to basically subsidize its standard of living. So our standard of living has went up on the backs of foreigners. So we basically export inflated currency where their bonds lose money, and we benefit from that, and we use that to have these huge deficits that we roll it over and over and over again to subsidize our standard of living. That is breaking. Wall Street today, we hit an all-time high today. So it's Monday, February 2nd. We hit an all-time high today in the S&P 500. We're trading 69.80, and the all-time high was 69. All-time high. And the economy is actually in dire straits. It's literally like one Jenga peg away from falling on its face. I'm calling this year the last year of American greatness. And by the end of this year, everybody will see exactly what I was talking about. Because once we lose our ability to borrow money, and we need the ability to borrow what we need. We need ability for all these transfer payments, Social Security, Medicare, all of these transfer payments that go back to people, the defense budget. We cannot afford any cuts, because we do that, our economy will get rug pulled, because the middle class has been hollowed out over 30 years. This is a dire situation, and you watch mainstream media and you look at the stock market. They always say the stock market is the economy. GDP and the stock market are very misleading. First of all, the stock market is way overvalued versus, tell me a sector that's strong here. And so now we're losing leadership in AI, which is what we've been leaning on. I don't know when it's going to happen, but sometime this year, the S&P is going to stop rising. And I think what's going to happen is it's going to go into a trading range, somewhere between 6,200 and say 6,600. It's going to get stuck there. And it's going to get stuck 5% above this all-time high. When it gets stuck there, people are going to start getting nervous. They're used to making money. And they're going to get nervous that it's going to turn from a 5% to a 10%. So it's going to be a slow bleed. And this is kind of something Michael Oliver talked about. It's going to be a kind of a slow bleed down. But I believe that slow bleed begins this year. And this is the reason gold's going higher. It's because of the U.S. bond market. The only reason. So thanks for letting me switch questions on you.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Yeah, happy to. John, I'll turn to you now for commentary on the gold and silver mining sector, why you believe some of these equities are being mispriced. And has this dip provided a buying opportunity, or would you be standing on the sidelines, perhaps waiting for further downside ahead before entering positions at this point?
Yeah, so I always coach my clients on looking at the metals prices before they buy into equities because that will help you by looking at support and resistance levels on the metals to get more confidence about your entry point on the equities, right? So silver for us right now should hold 65 to 68. If it doesn't, then unfortunately you're going to test 50 to 55. I mean, that's just the way it's going to be. I'm really hoping that doesn't happen. But looking at the screen literally every 2 minutes for the last 2 days, it's a pretty ugly trade right now, silver. So I don't know what's going to happen. I mean, there's a lot of, I mean, JP Morgan was reported to be short, on Friday the 30th. And they have a history of being short the commodity and have been fined billions of dollars for it. So for manipulation, right? So like that's not a small shop messing with silver right now. And I don't know no one knows. Anyone who comes on your show and tells you, oh, yes, we know where silver's headed right now after this is lying, right? Like, you have to just kind of guess, okay. Like I did the same thing in COVID, Jesse, in 2020 into 21. I'm like, hey, this price action in February and March of 2020 is not normal, as it is not normal right now. And at some point, you have to catch that falling knife, and you hope that you can get some basing to help your decision making. But that wasn't any basing; that was a V-shaped recovery. I hope the same for silver this time around. Maybe not, right? Like, but I think we'll catch some love around the 65 level, and if not, definitely the 50 level, 50 55. And if it gets to 50 55, I'm going to be loading up the boat on physical silver. I've already talked to my broker about buying a significant amount more at that price point, and I'd be buying silver equities. And I'll give you a few names. Don knows a lot of these names, likes them as well. First one would be Aftermath Silver, AAGFF in the States, AAG in Canada. They don't have like 100 or 200 million of silver equivalent. They have like 800 million plus of silver equivalent ounces. And why? Because they have 144 million ounces of silver, and they have all this manganese and they have copper, etc. And they're in places like Chile and Peru, which to me are on the upswing. If you look at what happened with Peru, I mean, Castillo has been jailed many, many months ago. Peru's already turned. Chile had elections mid-December, right? 6 weeks ago, and they went right. So we like Chile better than we did 6 weeks ago. So I think Aftermath is very well positioned here, and they just did a $20 million raise, of which $10 million was Eric Sprott. So that's not getting sold, right? I mean, he owns 30% of the company, which is, I think, his third largest silver junior position. Another one would be BlackRock Silver, US based, BKRRF in the States, and BRC in Canada. Don and I interviewed Andrew. This is quickly becoming like a closer to production story than I think either of us thought. And he commented on our interview, we could be, like let's say 2 months ago, he was saying 18 months from then, so 16 months from now, we could see hard hats, on the project. Like they could make a construction decision. That's one of the only silver or gold stocks that's going to benefit under Trump's regime because they are within that window of where Trump is in office and handing out, some fast tracking and some help, right, to companies like that. So they're Nevada based with 108 million ounces of silver equivalent. Another one would be Exelon, EXNRF in the States and EXN in Canada. I just talked to Sean, the CEO, a couple of hours ago, and I mean, these guys are really well positioned because of a new project they picked up from Buenaventura, which is symbol BVN. They're the largest player in Peru. And when you're the largest player in a country, you're not going to keep every project. You're eventually going to, you saw Hecla get rid of a project last week. I mean, these companies, as they mature, they're going to make decisions as to what we want to focus on and what we want to divest. And so Buenaventura got rid of this project. Exelon picked it up for very cheap, in our opinion. And they're going to be going back into silver production this summer. Like this is not something 3 years down the road, right? So imagine silver at 100 even. Forget about 120 or 150. Let's talk $100 silver for a junior stock trading at 34 cents when we're recording this. with 25 million in cash in the bank, right? Like these guys, cash and cash equivalents, to be fair. These guys are well positioned, and they also have like an Idaho project in gold with 1 million ounces. They've got another project in Europe, so we like stocks like that that are really well positioned juniors to take advantage of the leverage, the move that we're going to see in silver over the next 1 to 2 years.
Jesse, before you answer the question, can I just list a few stocks real quick? Take me 60 seconds.
Yeah, I was going to ask you to do that. So perfect.
Oh, cool. First of all, I want to say that I own all three of those stocks that John mentioned, and I like all of them. So I'm going to do 6 producers and 6 developers. Now, these producers, I think right now is a great time to I call this buying to the bottom. Like Hecla's off, I don't know, 20% here. And the way you buy to the bottom is you basically take a position. If you're fully allocated, then you're fine. But if you're under allocated in any of these producers, basically you take a position, and then if it falls 20% or 25%, you buy more. But falls another 20 to 25, you buy more. Chances are it's not going to drop 50% from here, but you're probably going to get at least one more buy to the bottom. Okay, so the 6 are the 6%. They're all silver names, by the way, because I think silver is going to go to 150 to 175 this year. So that's a massive move in silver. And if it happens, these miners are going to just do unbelievably well. So start with Coeur, and then Coeur and Hecla are kind of at the top of the list. Then Pan American and First Majestic, and then Endeavor. Now, those are my top 5 silver names. Those are I call them my Mormon list. You can marry all of them. And then the 6th one is Avino, which it's not quite big enough to join the Mormons list. She's still about 17. She's not quite a big enough stock. She only mines about 3.5 million ounces a year, but she's very pretty, but she's not quite old enough yet. All right, so the 6 developers, these are the 6 big development projects that are out there. Go Gold, Discovery, they have the Cordero project. They're a producer, but Cordero's development. Aya, they're a producer, but Boumadine development. Then Vizsla, and then Silver Storm, they're getting ready to go into production, but their San Diego project is the development. And the last one is Abra Silver, and I'm hoping that they build it and they don't sell it. So thanks for that.
Yeah, absolutely. Really appreciate that insight. Now, I want to talk about government policy shifting more towards being favorable in terms of resource extraction, because governments are, of course, starting to wake up to the importance of critical minerals and commodities. This has resulted in policy being aimed at getting mines online with less red tape. Both the US and Canada have made moves to fast track permits and increase domestic production. Walk us through how you think that could impact the mining sector here in 2026, John.
Yeah, so I follow this very closely. For those that haven't, in March of 2025, Trump came out with an executive order that basically was like, "Hey, I want information about all these U.S. projects on my desk within X amount of days." I mean, he was the first president to do that like that for as long as I've been alive. I mean, there have been other presidents that have cared, but not really. Let's be honest. And then in April of last year, literally a month later, Trump fast tracked a bunch of US projects. And you can look this up online, just Google search fast tracking in the US. One of those stocks was Paramount Gold, which is PZG. We really like Rachel, and that was an Oregon based gold project, which also had a 3 million ounce project in Nevada called Sleeper as sort of a kicker. So, Don and I took Rachel out to dinner. I think it was like 2 or 3 years ago, and the stock was around 25, 30 cents. And we were just like, how is this trading so low? And now it's trading at $1.72 as we're recording this. But they had transformational news, and that transformational news ties into what you're talking about, which is the state of Oregon. After fast tracking that in April, it did get fast tracked. Like literally took them about 9 months to get this positive news release last week, where they're basically going to be the first gold mine permitted in, making a construction decision in Oregon in decades. Like that's major, major news. And you're going to see other stocks in other places like Wyoming and other states that are less kind of followed than Nevada or say Idaho that are also going to start fast tracking stuff, I think, and get things over the finish line. But it's not just the US, and that's the point I wanted to make. It's Canada. We're seeing nationalism in these different countries, right? Where these governments are saying, okay, like we need to make a better we need to do better here in our own country to develop these projects because we don't know. There's a lot of uncertainty out there. And so one that just met with the Ontario government last week was PTX Metals. That symbol is PANXF in the States and PTX in Canada. Very small stock. Like when they met with them, they were at 10.5 cents US. So here's a 10.5 cent stock meeting with the Ontario government about how can we work together to develop this project faster and tell us more about your project and taking a genuine interest. When's the last time that happened, right? Like in Canada, like it's been years. I don't know. I mean, we're seeing a sea change in sentiment, which is so positive. So on days like today, on days like January 30th, I know how it is for investors and their sentiment because I'm right there with you. I'm literally buying and selling alongside you, right? And it is brutal. But you have to look at these things like Paramount or PTX Metals and say, there's light at the end of the tunnel. And this isn't something I'm going to have to wait 5 years for, or even 3 years for. This stuff is moving faster than we, had seen in past years.
And Don, do you have any thoughts you'd like to share in terms of governments fast tracking mining projects?
Yeah, I have 7 names that I jotted down that I think will all benefit from this. There's 3 gold development projects in Nevada that definitely are going to benefit. You have Lahontan Gold, P2 Gold, and Western Resources. Those 3 are all very similar open pit gold projects that are likely, have an easier way to get permitted. Then you have Blackrock Silver, which is another development John brought up. And then Silver One, which is also in Nevada. So that's 5 projects in Nevada that all basically are going to benefit in a big way if this stays. The current, what the U.S. government is doing right now, calling these strategic assets, if that maintains for the rest of the decade, these companies have no problem permitting these projects. Normally, you don't have problems anyway in Nevada. I can't recall where Nevada basically said no, 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 or the federal government, jumped in and said no, no, no. The last one that I'll mention is Hecla Mining. So Hecla, they have 2 projects in Idaho. Excuse me. Is it in Idaho? No, Montana. Excuse me. In Montana, that they've been. Unbelievably, it took them. This is how crazy the environmental resistance has been in this country. They've been trying to get drilling permits for their large Libby project. Now, this project already has like 200 million ounces of silver already, and they've been trying to get additional drill permits just to drill some more on this property. They've been waiting 4 years. That's how difficult it's been in this. The U.S. has not been a mining friendly country. It really hasn't. I mean, they bought that project. They brought both of those projects years ago with the Montanore project from Mines Management, and then the Rock Creek project from Rivette. They bought those 2 projects. They have not been able to advance them because of permit resistance. It's been hard to permit in this country, and so now it seems like things are really turning to turn here. So it's definitely good. Let's see how long it lasts. Now, like right now, one key area to watch is Arizona and their copper mines. There's been some copper mines down there that are beautiful copper mines that have the U.S. government. It hasn't been the state of Arizona. U.S. government basically said, no, you're not building that. They basically have been preventing these copper projects. It might be the state because I remember when Trump tried to fast track these projects, this one big copper project that's been on hold for years. The Trump administration just doesn't really have the ability to green light it per se, but they basically are trying to help them, doing what they can. I forget who owns it, but it's a really big copper. There's several big copper projects in Arizona that have been difficult to permit, like that Libby project in Montana. Permitting in the U.S. is hit and miss. Oh, I forgot to mention one. And that's Revival. So Revival has 3 projects in the U.S., one in Utah, 2 in Idaho. So that they're going to benefit as well. So I'll leave it there.
Let's talk about the appointment of the new Fed chair announced, Kevin Warsh. Now, people are saying, oh, he's going to be hawkish. Maybe that's part of the reason that metals sold off, though I don't think a huge part of it. but Trump has been attacking Powell publicly for not lowering interest rates at his command. So I don't see that it really makes sense that he would hire somebody who would go contrary to his wishes as well. What are your thoughts there on his appointment? Do you think he'll bend to Trump's will when it comes to lowering interest rates? Do you think he might surprise everybody and end up being a hawkish Fed chair? And your overall thoughts on his appointment, Don?
Yeah, thanks for letting me go first. So I really feel that he picked the best candidate. I mean, if you look at Warsh's resume, it's really impressive. I mean, Stanford, cum laude, straight A guy, and then he went to Harvard. And you look at what he's actually educated in. And then he worked on Wall Street, and then he worked in Washington. I mean, this guy just checks all the boxes, and he's a total insider. I mean, he's friends with Bassett. He was he was the perfect pick as far as credentials wise. Trump would have preferred him to be a little bit left of Powell on the dovish side. And for instance, Powell pivoted in September, and Warsh might not have. It was kind of because everything was kind of going fine. It was more the economy was the labor market in the summer was starting to weaken. And so Powell basically said, okay, I'm going to do this. So how much would have Warsh done that? We don't know. But so he's a little bit more hawkish than Powell, but not much. And they're almost clones. I mean, if you look at their background, they're both very smart and they're both they think for themselves. They're not marshmallows at all. I mean, these are guys that are, have a backbone, if you will. And so I think Trump didn't really want a hawk per se, but this guy was the best candidate. He's like, he didn't have much of a choice. He's like, I got to pick this guy. But the one thing I want to make clear here is that Warsh has the hardest job, period. It's harder than Trump because he can't fix the economy. And he can't prevent a recession. The only thing that he basically has the ability to do is cause more problems. So he's in a catch-22 situation. The more money that he prints, the more inflation he creates. If he doesn't print enough money, he creates a recession. So he's in a lose-lose situation. He can't win here. That's what I've been saying. He can't win. And the reason why he can't win is because this problem has been building for 30 years. It's the same thing with Trump. When Trump came in for his second term, Biden said, here you go. Here's inflation. Have fun, Mr. Trump. There's really nothing Trump can do to really fix the problem. And there's nothing Warsh can do to fix the problem. There's this saying that, you kick the Fed kicks the can, right? They just lower rates, print more money, kick the can. We've reached the end. The wall's right in front of us. There's no way to kick the can around the wall. The wall's it's right there in front of them. I'm surprised, but Warsh, the one thing about being a Fed guy is you have to keep spinning things. Perfect example was Powell was in the last press conference, and he said that gold doesn't matter. It's not really relevant. We watch it, but it's not really relevant, which is total BS because he had to spin it. Because if he would have just given gold just a little bit, gold and the dollar are competing against each other. You don't want to give them a little inch, right? He'd give him. It's not even relevant, right? And so they have to spin it positive. So that's what Warsh is going to do. He gets into office, he's going to put it on his spin cap. Because if he doesn't, he's going to get the wrath of Trump, right? So he's going to put it on his positive spin. Perfect examples like Bassett. Bassett, if you listen to Spin, I mean, all that guy does is spin everything positive, right? So is Howard Lutnick. He's the same way. Spins, it's all spin positive. So that's what Warsh is going to do. He's going to try to spin, but he's trapped.
And John, your thoughts on Warsh as the new Fed chair? Is anything going to change? Do you think he'll lower rates as Trump is requesting repeatedly, or do you think he's going to be more hawkish?
So if you look at his previous work, and Don did a great job there, so I'm not going to spend too much time on this. 2018, he was definitely a hawk. And I think I disagree a little bit with you, Jesse, in that Friday's action, I was watching when that announcement happened, and gold and silver immediately tanked along with GDX and J. So I think the sell-off was predicated by Warsh on January 30th, and then it just fed on itself because of margin. But I think it's an overreaction because Warsh is going to be a good choice for continuity, right? And people like continuity in markets. They don't like someone who's going to come in and be completely different than Powell. So I think you'll see some continuity there. The real question is going to be, can Warsh move from the hawk side to moderate or dovish? And that's going to be the $64,000 question. I think he can, because Trump is Trump. I mean, he is not putting him in office to be like, yeah, let's raise rates. It's not going to happen like that because real estate will collapse and the stock market will collapse. And Trump doesn't want that on his resume. That's just my opinion. But I don't know how he does it. I don't know how quickly he does it. And so that might be a buying opportunity for us in this sector is that, there's a March meeting, there's a late April meeting. I don't know how active he'll be there because he won't be active at all. Powell's in office until May, right? So you still have the same chair through the next two meetings, which I think the market is also missing. This isn't something where Warsh walks into office tomorrow, right? So I think the combination of Trump and Powell leading the country has worked out amazingly for mining as a sector. We've got that runway from now until May, which is a long, long time.
Well, gentlemen, fantastic conversation. John, tell us about Feneck Consulting.
Yeah, sure. I just wanted to comment on one of your interviews real quick. I saw you interviewed Norsemont Mining, which is a stock that
Yeah.
Don and I interviewed as well. And that one's NRRSF. That was a good interview, and they are in Chile. And so, as I mentioned with Aftermath, we've had a regime change there 6 weeks ago. So we like that still. As far as our website goes, you can go to fenneckconsulting.com/performance and check out our 10-year track record. Since our last interview, Jesse, I posted my 10 years in the mining space, and we're top decile for certain time periods over 10 years, which we're really proud of. It's days like today and Monday or Friday are the days that make you a good leader. I wish I could have performed better on Friday, but things were sort of just getting tossed around. So I think, we're going to recover from that. And we had a tremendous January in our portfolio before that. But our services are threefold. We have a newsletter as an entry level. We have real-time emails for clients on stuff like Friday, where we sent out two emails. One was at 3:59 a.m. saying this doesn't look good, and make sure you check your positions and make sure you're happy with what you own based on your risk tolerance, because that kind of information can be very valuable to certain investors or traders. And then lastly, we have paid phone calls. A lot of my competitors are starting to do this at much higher prices than we charge, but we charge what my lawyer charges me. So, basically I'm trying to charge something reasonable, and let people have a 15, 30, 60-minute call based on not buy, sell, hold, but more like, hey, this is kind of the conversation we're having today, right, Jesse? Like, silver did this. What do you think about this? How should I think about this? I own a lot of physical silver, etc.
Great. Well, I'll put a link in the description to fenneckconsulting.com. Don, tell us about goldstockdata.com.
Well, I'm going to do it to you again. Jesse, you're going to quit putting me on your show. There's one other topic. I usually, sometimes they say, well, is there anything else you want to add? Right. This is my add-on question.
Jesse didn't say that.
He didn't give us an add-on, right? In January, there were 9,800 contracts delivered. That was 49 million ounces. So that was very unusual. January is not considered a major month. Plus, historically,
are we talking gold or silver?
Silver deliveries. Yeah, 9,800 contracts at 5,000 each. 49 million ounces were delivered in January, which is kind of an unheard of level. Historically, deliveries usually don't happen on COMEX. Usually it's just a trading market. Very few people take deliveries, like 50 million ounces maybe a year delivered. And we had that done in 1 month. And last year there was 400 million ounces were delivered. We're going to break that again this year. And if you look at how much is registered, there's not enough. There's like, I don't know, 125 million ounces. And by the end of March, it's going to be really whittled down. Now, here's the kicker is that you have to understand that there's only 800 million ounces of silver that are mined every year. So that's the new inventory, plus about 200 million ounces recycled, a billion ounces. That's kind of inventory that we have. And then everything else has to come out of above ground stocks. So of that 1 billion ounces, about 70% of it, 700 million ounces is required by the fabricators. So all those deliveries that are taking place today, that's people that basically say that there's not enough inventory somewhere else. I got to go to the COMEX and get it. So these inventories, now we have like 200, 300 million ounce deficits. Those deficits are for investors. The mine supply is fine for all your fabricators, but there's not enough for the investors. And so basically what's happening is the gold comes out of the ground and a lot of the investors are soaking it up. And then the people that need it, like the solar panel companies, they're going and taking deliveries. So basically we have a fight over physical silver right now. And that's not going to stop. And keep an eye on February. February is supposed to be a very slow month. And then March, I think March is going to be massive. And so that's a thing to keep an eye on. I do these conversations with Grok. You can have these long conversations. I have these long conversations. And my thought was that we're not going to have a shortage until Q2 or Q3, a problem. Grok says it's going to happen in Q1, because Grok looks back at all of these deliveries that have been happening in COMEX, and it looks at the silver that's coming in that it can resupply with. And basically says, nope, Don, it's going to blow up in Q1. So what Grok is basically expecting a massive delivery here in March. If it happens, I don't think this is a nothing burger. I think it's going to push silver prices higher between now and the end of March. That was the comment I wanted to make. So as far as my website, what I do, it's basically data. It says gold stock data, right? It's not a place. Everybody wants to come on there and get stock picks for me. It's a tool for people to analyze stocks. I want to make that point. So if you already own stocks, you want to find some more and analyze them. That's what it's for. But thanks for having us on, Jesse. It was great. Really enjoyed it.
Yeah, me too. And I'm going to put a link to goldstockdata.com in the description as well. Gentlemen, as always, it's been a blast. I can't wait to circle back. Hopefully when silver is at that $150 to $175 level. But regardless, we'll have you back on again soon to break down the markets for us.
Awesome.
Thank you, Jesse.